right. I think we're getting ready to go live. So yeah, this is going to be obviously our stock talk. We're going to talk about retail in this talk, but if you guys have any other hot stocks or just questions, feel free to to chime in and ask questions, or if you just want to be on the fly on the wall, that's also fine. So just input where you can. If not, we're here to answer questions. I see you, Moses. What's going on, Moses?
This is what I do, stocks.
3
years.
Hey, I'm coming. Hey, Moses.
What's going on?
Yeah. I'll see you soon, man.
Wait, you coming back where?
To GA.
Perfect.
Yeah. I'll be back next week.
All right.
Hey, congrats, man.
Yeah. Good looking. Stay busy during Corona times. Stay working.
Yeah, we still go to work every day. So.
Yeah. Are you going in?
Every day.
Oh wow. Oh, that means you're very, very important. You got some top secret work, don't you got going on over there, man?
No. All I do all day is buy stocks. So.
There you go. Why don't you start and kind of just tell me about your stock history? How long have you been trading? What platform do you trade on? And tell me, what got you into stock. So how long, what platforms you use, and what got you into it?
Well, I've been trading for 3 years now. Well, I'm not a trader. I'm mostly a buyer, and then I hold it for a long time. And I have a couple of stocks that I like. So my number one stock that I go to, that I always tell people to get, it's probably not the best one right now because it's not doing good, but it's Boeing. It's my number one stock that I go to. The only reason why I get Boeing, because number one is like, look at it like this. One big company that has defense and commercial. If it wasn't for one of their aircrafts that's doing that right now, and the whole flying thing, Boeing would be like the best company to invest in. Right now will be like the best time to get in because it's like all-time low. So
yeah,
it's one of those companies. It's one of those companies that will not go bankrupt because if you look at it, they employ so many people. It's like American made, one of the best companies in America, cannot go bankrupt. That's my perspective.
Yeah. I actually agree too on Boeing too. I'm really high on Boeing for that fact that they're in the commercial space and they're in the defense space. So obviously on the defense side, some of the stuff that they got, the MQ-25 and those things. So you know what I mean. I was paying attention.
We lost it to them, so.
Yeah, and even if they would have got it, they were still going to be, we were partnering with them as well, so they were going to have their hands on that project no matter what. So
that's right.
So, but yeah, so we're gonna just we'll get right into it. Talk about some retail stocks. I'll start with a retail stock that I've had an eye on, and we'll switch it up. Like I said, last week it was travel. This week, so we're going to talk about different. So one of the stocks I looked up, and maybe the ladies can appreciate it. It's only one right now on the call, Brenda, but is Lululemon. Lululemon is doing really well. They've been doing really well prior to this crisis, in the pandemic. But I was just reading up on them that their model is, they're selling a lifestyle. They're kind of almost like the Apple of athletic wear for women and now men. And they have a unique situation. My understanding is where they have their own, everything's in-house with them. They deal direct with the markets in Asia, and they ship direct from there or in their stores. So they're maximizing their profits. I see you, Marissa. So Lululemon is a good play for anybody that's you know, looking into retail. I have a few more, but that's just one I wanted to drop right now. So anybody else want to chime in with like retail type of stock? I'll go to you next, Jay, and then we'll chime in. You on mute, Jaden. It's on you.
I'm next. Oh, I thought. Oops. All right. Anyways, yeah. What stock was on my mind? I'm a little bit different. Any gamers out there who still play video games? Maybe. Yep. Thumbs up. I see you, Renee. I see you, bro. Yep. D-Mac. Yep. Okay. Yeah. So I'm gonna go with GameStop. I haven't invested in them, but right now I saw that they're closed like around $4.20. So the thing I like about them is, I mean, clearly, you know, everybody's been staying at home the past couple of months, been playing video games, and they also have this business where it's called like a curbside business. So you go ahead and, you know, purchase your games or whatever online, and then you just pick up the game, you know, just drive by kind of a thing, right? And they said, like, you know, their sales have been like, they maintain 90% of their sales by doing that for the past couple of months. So I think that's pretty good. The only downside with GameStop is, you know, they've been furloughing a lot of workers, you know, cutting pay. Some of the executives, they had to take a pay cut as well. So, but even still, they're still estimate to like jump up to like $8. So anybody that's in the option trading, I'm still trying to learn like the option side, but I think that's a good option, kind of a stock to play around with. So, but yeah, but their range is like literally $2 to like $8. That's what they're projecting, you know, for the next couple of months. But so that was a retail I was looking at.
Like, what indicators do you guys look at when you're picking up a stock? Because, like, I have my own thing when I'm picking up a stock. I'm mostly invested into like dividend stocks that will pay me in the future. So just say I hold Boeing for, when I buy long term. So I hold Boeing for like 10 years. I'm thinking more like right now the dividend is suspended. So I'm thinking in 10 years, well, I'm hoping in 3-4 years the dividend will be back, so I can be making money off of dividend, because that's like income coming in, depending on how many stocks you have. So I'm thinking, do you guys have any other things that you guys look at?
I think for me, Moses, I mean, I was actually just talking to Sherman the other day, right? We were talking about the market to revenue ratio, right? We were talking about the market cap. That's a good indicator. Sherman, you want to kind of talk about that, what you were looking at real quick, and I'll come back to me. That was my way to tie you in.
I could speak on it. I'm still following the company. JCPenney is looking at a bankruptcy filing right now, but the expectation is that they're not going to leave the market. Just they're too broad, they're too widespread, and the market cap to revenue ratio, as mentioned, was just completely out of proportion. They're managing $12 billion in revenue, but the market cap for the company is like $50 million. So, you know, someone can go in and purchase the company for less than the company actually manages. It just seems like it's disproportionate. So if you're following the company, JCPenney is trying to find a way to stay alive and stay on the market, basically. They're going through bankruptcy filings right now, and apparently the CEOs are trying to work out their own compensation, but it's still up in the air. It's something interesting to watch. And that particular ratio, again, is just a way that I was trying to sort of understand what's happening with that company relative to, you know, the value and the 100,000 that they represent. So that's my third, but I think that's really interesting right now in JCPenney.
Yeah, and you know, I was looking at that, and I think it is a good indicator. I also look at earnings per share. You know, I look and try and see, you know, what their average return is on the EPS. You'll see that on there, and you know, anything over 1 is usually going to be a good indicator of, you know, your earnings per share. And I think it's just based on like $1 or so. So if you see one, I'm not 100% sure, but I know EPS is good. But a lot of times now with everything moving so quickly, man, I just go you know, really just off a feel. You know, I definitely look at the charts. I look at, you know, the 52-week high, the 52-week low. So, you know, that's a lot of things I'm looking at right now. So if I see the company was at their high, you know, recently, and they dropped, you know, 30%, then I feel pretty confident that they can, you know, get back up to that level, especially if it's a company that has just, you know, been running really strong, you know, like maybe like a Tesla or, you know, even like a Boeing. Moses, I might look at Boeing and say, well, you know, what's been their high and low, where are they at on that cycle, and really see if I feel like I'm going to catch that, you know, stock coming back from the dip or not. Or sometimes I buy it on the dip, just knowing or with the feeling that it can't go that much lower, and I'm just going to ride the dip back up. So when you talk about holding long term, you know, those are things I think about. So anybody else have any retail stocks that they want to, you know, pull out? You know, this is the main conference, or just any other stock, but I'd like to stick with retail. But if any other hot stocks, and why you guys are looking at that stock?
Well, I was low key looking at Macy's here and there at about $4 or $5 a share, and I noticed they at first was getting ready to prepare for a bankrupt, and they tried so many ways to avoid it, and it looked like they did, and they even took I believe took a $15 million loan, something like that, and now I believe they're taking advantage of all the states that's literally opening up that's opening up right now, and especially out there in Texas, out there in the East Coast and the South, like they're bringing the stores back, and I know they closed a lot of the shops down, and now they're talking about opening stores, all the stores within about 5 or 6 weeks. So that's one retail store I was looking at. I haven't bought any shares. I've just been snooping around, just like taking a look at it, see if it's a potential buy in that.
What is the logic behind you guys buying retail? Because I personally have a feeling retail will not be around anytime soon. The reason I'm saying that is because everything is going to Amazon. So I feel like in a few years, Macy's, all those one, your market share will be so low that.
Yeah. I mean, I think, like I said, we're just doing a rotation. Last week it was retail. I mean, last 2 weeks, it was 2 weeks ago, it was not retail, it's travel. Jay, what was it before that? It was, forgot what we did. We do technology?
No, we haven't done tech yet. Yeah,
tech's going to be a big one. You know, I think this is, everybody knows the hot stocks. Everybody's, you know, we can do medicine too, and I think that's one we'll cover. But, you know, I think you really find those deals and you kind of look where everybody else isn't looking, right? Or if you think there is nothing to be found, you know, that's when you find it. Just with like real estate, right? The market's hot, but there's still deals to find if you know where to look. If you look in areas where gentrification hasn't taken place, you know, same thing. So even like a JCPenney play, like Sherman was talking about, it's stupendously low. Like, who goes to JCPenney's and buys JCPenney's? But, you know, as I mentioned to him, you never know what would happen. Say this scenario happens, right? Amazon buys JCPenney's out right now, and they use JCPenney's locations in their current real estate as on-site return or drop-offs or pickups for drone delivery, right? So we may get into drone delivery coming up soon, and JCPenney gets bought out in there, you know, for $5 a share. And what's it at, Sherman? It's like $1, under $1 right now, or something low.
It's about 25 cents, 25 cents.
Okay. Yeah. So that's Moses. You know, I like to try and find and dig a little bit deeper than, you know, the common plays, and so.
I have. So I do. Well, it's kind of a combination of stuff. I guess whenever I invest, that's my kids in the background running around. Whenever I invest, it's kind of I'm in the industry, so I kind of focus on kind of like goals. The same thing when I talk to people I'm working with about. So it's like, okay, what's your time horizon? Because Boeing could be a great stock, but if somebody has a maybe 3-year time horizon, it might not be that great from a risk standpoint. It might be great for somebody who is in their IRA portfolio and they can ride out the next couple of years till it gets back up.
That's true.
And so one thing just in relation to retail, I was actually just looking it up. I didn't get into it. I got in my portfolio, I mostly have tech ETFs, a couple tech stocks focused on cloud investing. That's not for today. But there is the consumer staples ETF. It basically tracks the entire sector of the S&P 500. And I haven't ran the numbers to see what percentage is up, but it has a nice kind of V curve. And then the idea there, instead of just buying an individual stock, I always tell people, don't put all your eggs in one basket. When you have that ETF, you track an entire sector. Amazon is of course a part of that. Off the top of my head, I can't think of any other. There's I know eBay is another e-commerce stock. It's not as talked about, but that's a retail stock. But that's retail e-commerce. And so it's a Vanguard. It's called VDC is the Vanguard version of it, and there's another state version of it.
Okay.
That's.
Go ahead.
Oh no, I was saying just that's my input in regards to the retail and retail stocks and kind of looking at those positions versus definitely if you could snatch up a stock for $1 a share, and in 10 years later or a few years later it's up at $1 or $2 or $10. Then that's great. But even better if you could snatch up a couple companies under one ETF and ride that wave up. And obviously sometimes in the cases of some of those companies, they pay dividends. Those ETFs generate dividends as well. It's just another an additional strategy.
Yeah, I love ETFs. They're a good way to get into the market. What's a good ETF you would suggest? You mentioned, but for example, what's one that you would suggest for people to take a look at, just that you've seen that's done well recently?
You're talking just in general, you're talking about just the retail e-commerce type stuff?
Yeah, just give me what you got. I mean, like I can tell you right now, Google does well, right? That's a stock.
Oh yeah, I didn't even know about that. That was good. I took that down in my own notes. I was like, oh, that's good. Okay, that's what's up.
Yeah. Well, I'll transition. Let me give you guys another one that I researched and was looking at. It's called JD.com or JD. So they are a competitor. They're the #2 e-commerce business in China behind Alibaba. I'm sure you guys have heard of Alibaba. So JD is at like $49 a share. I can't tell you all the metrics and all the numbers, but I know Alibaba is trading at a larger price than that. And you talked about e-commerce, Kev. There you go. So if you can't get into an Amazon or a Google or even an Alibaba, there's another company that is in e-commerce, and China's obviously, a very big country. And so that's another one. Look up JD, like Joseph Daniel. JD.com is another retail stock. They've been doing really well. They've been gaining at least over the past 3 months right now. So, that's another one to keep an eye on. $40, $50. That's not bad.
I will. There's another one. As far as China, I don't know if it's retail though. So one of the ETFs I have is it's a tech one, so it's not retail. It's and it's a newer ETF. It's called FFTY. FFTY. That one of the stocks with that that ETF tracks is Zoom. So actually the Zoom that we're on right now, Zoom is a part of it, Netflix is a part of it, Amazon's a part of it. So it's a innovator ETF from created by Business Insider. And so FFTY is the ticker symbol. That one's trading at $31 a share. And it was actually, I believe, before the big drop in March. It's trading at 36, 37, 36 and some change. So it's trading at about 31. So it's almost back even. And it was trading down at about 25, 26 when I started picking some of it up. And so because of all the underlying stocks, it's part tech stock, has some other different stocks in the underlying ETF. And then there's one Asian stock.
You better go this way. Be this way. This way or this way.
Real quick, what are the costs of some of the ETFs you guys have been mentioning? So I know a lot of times your yield, a lot of your returns can be eaten up and gobbled up long term because of high cost, and you have not potential investment.
No, you're absolutely right. So cost is a part of it, but the other thing is it's like just like anything else, it's like looking at what you're paying for. So that ETF, the one I was just mentioning, the expense ratio for that is 0.8%. So it's 0.8%. So essentially, to keep it simple, if you make 10% on the stock, you never see the expense ratio cost actually come out of a stock. It's calculated as a part of the returns, as it's, the appreciation. It's basically all the funds that are inside the stock. The 0.7 or 0.8% is used to cover the expenses of running that ETF. But most ETFs, that's a newer ETF. A lot of ETFs, they're probably less than 0.5%. So you're barely going to see any return on that, any cost on that. And the other Asia stock next to Alibaba, I think it's I don't know if it's retail though. It's called Tencent Holdings, and that is almost like that's like an Asian version of Amazon. Not Amazon, sorry, AT&T, because they're one of the top internet providers in China, and they're at about $56 a share.
That's right.
Yeah, and so it's a good position. That one I don't have any in. I've been looking at the Moses. Moses, your name was?
Yes.
Yeah, like Moses. Yeah, I same looking dividends, companies with good balance sheets, that got good revenues, good earnings per share, and that have historically paid dividends. Because that's probably one of the big things now when the market, the companies that are performing better are the companies that have good balance sheets and are still able to pay the dividends, even though maybe their revenues aren't what they thought they were going to be because of the coronavirus and stuff.
Okay, that's that's good back and forth. Chancellor, you asked that question. Why'd you ask that question? And a lot of our callers and viewers are kind of in the early parts of their trading experience. So can you explain why you wanted to know like the cost and all that, and how that affects looking at an ETF?
Just particularly because do a comparison for a lot of ETFs versus a standard S&P 500 ETF. On paper, they can look like you're making a lot more gains, but after you factor in the cost of those ETFs, you're really about breaking even when you factor in the long-term cost. So you may end up a point or two higher than the S&P 500, but you also end up with costs that make it on par. And so that's why I was concerned with the cost of the fund.
Okay, and that's good to know. I think that's, you know, important to consider. So um are you more of a stock trader and just focusing on singular stocks, or do you go in ETFs or do you go for specific stocks, or what's your strategy?
So I have a mix. Now I'm more heavily vested in well, I have a few different accounts. So my base retirement account is kind of that textbook, well-rounded account. But then I have I call it like my personal explorer account. I have the garage door open and everybody's driving by now. And that's primarily focused in the cannabis industry. And so I have a couple of cannabis ETFs, MJ and THCX. Both are dividend paying, and they're in the tank right now. But my time horizon, I don't particularly care, because I'm looking at I imagine with the next administration, things are going to change, and we're going to end up, it will be legalized at some point, and those stocks will end up, I think, at least growing about 10x once their capital's been able to be moved into banks and things like that. So they'll actually be able to have real assigned values to them that are, and they'll have liquid capital to be able to move in and out of the markets. So, and I work at Qualcomm. I have some Qualcomm stock. It's a good dividend paying stock.
Yeah.
I would say it's kind of on the expensive side, more than I really want to spend. If it wasn't given to me, I wouldn't buy it.
Yeah. I remember when it dropped down to $50, $55. I was like, damn, man, I wish I jumped on it when it was at like, I knew they were going to be back, because I know about Qualcomm too. People don't realize they have all those patents, and they got so much royalty money coming in. But
is it about $20 per phone sold globally?
Yeah. Fun fact, y'all. Qualcomm is in everybody's phone. So that's a quick little side thing. So thanks for sharing that. And how long have you been sharing stocks?
Oh, since 93.
OG in the room. OG, okay, OG on the stock. We appreciate you. So, and what was that stock? Everybody was wondering in the chat. Is MJ, you said, that marijuana stock?
MJ and THCX are the two.
THCX. Yeah. Somebody put that in the chat, please, over here, so we can say that. I appreciate you sharing that. Another retail stock I'm gonna jump back is actually I was reading about was Ulta. And, you know, this for the ladies, I guess, you know, for Ulta is the makeup store. And you know, that's a thing right now. You know, Ulta is needed, and the ladies need to order their makeup, and just people got their different you know, care chemicals and stuff you need, and face products and all that. So, and they're in the airports. So it's expected to pick up as travel picks back up and things like that. And so Ulta, I think they're like a cosmetics company. So
that's a really good one. You guys kind of missed the bottom. I got it at 160. Is it
Ulta
230?
Oh,
you 230 now. So
you got that, Moses? You jumped in on that?
Got rid of it though. I got rid of it at 250. I mean 215 or something.
Oh, you jumped off the ship, huh? That's all right.
Yeah.
You made some money though. I ain't mad at you. And that's okay. You know what? I'm seeing a lot of people win right now, really, by just taking the short gains. And people, you know what I mean? I'm seeing a lot of people do very well at taking 3%, 5%, like, and jumping out, like making a couple $100s, right? Putting 500 in, putting 1,000 in, and making 200, and taking that and really flipping that. and you know, they're really just catching the wave. You know, I know a lot of people are looking at MGM right now.
I kind of spoke wrong. Sorry. It's at 200. I misspoke.
I respect it, Moses. So, like MGM is another one I'm hearing about, you know, that, you know, folks are keeping an eye on right now. What did I think I might have mentioned Lowe's in my last, Lowe's and Home Depot. I remember, you know, I don't know about you guys, but I've been doing a lot of projects, a lot of painting, you know, just a lot of tinkering. And I've been to Home Depot and Lowe's like nobody's business. So, you know, that they've been doing really well. They were doing really well. And I'm mad I missed it. It was like $94 like 2 weeks ago. And now it's like at 110 or something like that. So, what's going on, little? Oh yeah, definitely. Home Depot's is better than Lowe's, Jaden. Yeah, definitely. Home Depot's is the go-to. I just know their stock is a little bit higher in terms of stock, but in terms of my time, it, you know, just works out a little better. They've done a really good job adjusting to, like, you know, the COVID and transitioning to, you know, just how the stores ran. So thanks for putting those tickers in there, Chancellor. Any questions?
I have a question for you. So, you know, with COVID-19, and I was thinking about the face mask and all that moving forward, I don't know how everyone's going to really feel about wearing makeup underneath that mask that they're going to have to be wearing and smeared. So I'm wondering if that's actually going to see a downturn. I don't wear makeup, so I don't know.
I'm still wearing my makeup under the mask.
Exactly. Thank you, Taylor.
100% still wearing my makeup because when I get tired of the mask, I take it off and I want you to see my face. But I've been.
Isn't that right, Crystal and Yesenia and Marissa?
You know what? Oscar has more than just makeup. They have perfume. They have a lot of different things.
Okay.
Hair
Yeah. And even hair care. So
yes,
more than just makeup. But I see what you're saying. But you know what? When I want to wear makeup, I just put the temporary mask on. But then I put my N95 mask on when I'm not wearing makeup.
Okay. So there's not going to be a real downtick in that then. Okay.
Nah, you heard it. The ladies are still about to put their makeup on, brother.
Yeah. I got to do my market research.
Let it rock.
Good. I'm glad you asked.
And you better shut up too if there's any lines or something like that.
That's true though. Sorry, I stepped away for a second. So we're not going anywhere without our makeup or what is it? Because sometimes I'll be honest. I'll put the makeup on in my house when I get bored because I get tired of looking myself in the face and seeing something dead. When I wake up in the morning, I'm like, I need something to feel alive so I can do my business, I can do my schoolwork, I can do all this. So it helps you just make you feel more alive. So yeah, I think people still using it.
Yeah, I understand. My girlfriend is the same way in here. And I'm like, I appreciate it. Like, do your thing. So
I'm old and married. My wife doesn't wear makeup unless we're going out. So you know, we got kids. You know, we do all that. So we're not. She's fine anyway. So yeah.
There you go. Shout out.
Shout out.
Okay, that was a good question. So yeah, I think that answers your question there.
Mm-hmm.
Does anybody else have any other questions or stocks they wanna just shout out?
Do you guys do option trading?
Oh man, I've done it. I've jumped in and out, Moses. Options trading is a crazy world, man.
Yeah.
Yeah, it'll humble you real quick. You be like, come on, man. I swear one time I hit my price point and everything and I still didn't make money. I was like, how? And that formula is.
You ran out of time.
Hey, real quick. The best piece of investing advice I ever got was from my father. And he told me never make an investing decision based on greed.
Yeah.
Once you reach your price target, sell it. He never did. My father never followed his own advice. He lost. But let me tell you, I listened to what he said. You know, that whole "do as I say, not as I do." But I followed that advice, and it's treated me very well.
Yeah, I know someone that bought someone that got me into Boeing. So initially they bought Boeing at 290, and then it hit 450, and the person said it's gonna hit 500. I'm gonna leave it in there, and then it came back to $90.
Yeah.
So.
Yeah.
I guess you just have to read the charts and see what.
It never hit 500.
Huh?
It never hit 500. Huh? It got close though.
It got close, like 450-ish.
Yeah, and then dropped back down. Oh, that hurts.
Yeah, it never hit 500.
Yeah.
But
that's interesting, Chancellor. I just wanted to say that you said that about what your father said, because literally a couple days ago, I was listening to another investor talk about how his biggest mistake was being greedy. And so like now he gives one of his biggest pieces of advice is don't do anything, any deals or invest for greed, because that's how he lost a lot of money, like the most money he's ever lost. Yeah.
You know, I kind of seen it both ways. Like I bought stock, like I bought Visa at 130, and then I sold like at 150, and then it went right up there. I bought MasterCard, sold it so low, went right up there. So I'm in this point where I'm like, I'm just gonna hold the stocks that I like, and then just sell the ones that I just playing around with.
See, that means you didn't have a plan. So you got to have a plan.
I didn't have a plan. That was like when I was starting. I was like, okay, I made like $200. I'm getting out. I didn't know what I was doing. So
yeah, you were at the crap table.
So right now I'm starting to look at charts and reading charts and seeing like. But right now it's so hard for you to gauge anything because like the prices are like so fluctuating. It's hard for you to gauge anything because nothing is stable right now.
I think there's a big disconnect. I think the market. I personally think the market and the regular people they're becoming divergent.
Yeah.
Money now that regular people making the national average in income, their incomes could completely vanish, go away like we're seeing now, and the market could still ascend and continue to climb.
Like today.
Yes, because there's enough wealth in the market, there's enough wealthy people to sustain those businesses and allow them to continue to make money.
Yeah.
And you know, you're coming back to like a feudal system where you only have the rich and the poor. And the stock market is a great demonstration of that, where you don't really need the average American to invest to make any money.
Yeah.
So with the impending, well, we're in a recession. How badly will that actually impact the stock market this time around? You know, that's the $1 million gamble right there.
It's crazy.
He's on. It's gonna collapse based on emotion. Is not really based on numbers.
Yeah, and I think they're trying their best to keep it inflated and keeping it going. But you know, that's why you got to get in there and play the game and understand what's going on and what's real and what's not. And you know, got to take risks. That's all it is. It's a form of gambling in a sense. You know, I feel like you can look at the numbers all you want, but sometimes that emotion just takes over. You know.
And buy what you know.
Yeah, buy what you know. And also, you guys know that you can write off some of your losses up to 3,500. So something to keep in mind. If you lose up to that amount, by the end of the year, you can claim that on your returns.
We're like out. We're about 15 minutes out from wrapping up. Jay, I see you talking about these negative rates. What's this about, man? I don't know. Can you explain this or somebody?
I don't. The negative rates. Basically, that's when the Federal Reserve is essentially. It's almost the bank is paying the Federal Reserve to take their money, almost essentially going negative when like rates are negative. And it's a way of because the bank, it has to pay interest out. As a result, that it forces them to loan out more money. So it's just a way to kind of stimulate the economy even further. But the chairman already mentioned that that's something that he doesn't want to do. And a lot of it is because ultimately that doesn't really help the banking system. And it's one of those things where it's kind of like, you know, there's so much news flying around on the internet. It's hard to make sense of any of the specifics with all the information running around. I mean, ultimately, like it's kind of the underlying. Just I've been listening in the background because my kid's been screaming, but it's really just get in the game, have a plan. The ultimate problem is the market. I mean, my perception on the market over time. Frankly, it's not based on people. It's ultimately based on businesses. The business is doing well. If the market goes up over time, not because of the income of the people, it goes up over time because of the earnings of corporations and inflation. Inflation raising the prices of goods and the earnings of corporations going up over time. So just kind of like you said, Brian, get a plan, find out what you want, find out your goals, get in the game. Don't be greedy, and just stay the course over the long term on your plan. And that's really, I mean, the best way to not get left behind, essentially. And so,
yeah, preach. That's the preach emoji right there.
I think one of the, as I said, I think one of the other reasons why they don't want to go negative on their interest rates is because I think it might cause a run on the banks, because basically any of your deposits now you have to pay to have money deposited in the bank. So right now you earn money on your deposits. If it goes negative, that means you have to pay for the security of having your money in the bank. So there'll be a cost associated with your deposits. Not a lot of people are going to want to have their cash sitting in the bank if it's going to cost them. It's no longer that secure. So that's one of the other downsides to negative interest rates.
Yeah, that makes sense, and I would think that's why people are like, well, let's buy, digital money, with Bitcoin and all that stuff. It's like, is that where we're headed right now? Because cash doesn't really mean much anymore. It's all digital. Everybody's buying stuff online. It's crazy. I mean, because one of the stocks I was also looking at was like Rite Aid, right? So how people don't even want to go to grocery stores. So I don't know if anybody ever heard of that app, Instacart. It's a way for people to like literally go pick up your groceries and they bring it back to you. So Rite Aid has partnered with them. They just talked about it yesterday, to be able to to help out the people in order to stay home. And it's called like a leave at my door delivery. So literally they're gonna buy your groceries, buy your medical, whatever, and then they're just gonna leave it right in your footsteps. So, I think people are definitely wary when it comes to like just being outside and how they're spending money, because like forget that. I'm just gonna spend online and call it a day. And if I don't have to move anywhere, I won't. So it's gonna be really interesting these upcoming months with how people are going to be spending money, because at the reality of it, the economy thrives on consumers. They thrive for people to spend money, so people, when they don't spend money, that's when things go to tank, so I don't know. It's crazy.
I actually want to make a shout out for Instacart, because so my wife is actually on deployment. I'm prior military. My wife is actually out to sea right now. She not gonna come back till August. But anyways, before I went on there was like a ton of negative reviews. And I was like, you know what, I need this because obviously I can't go into the store with more than one person. And I got 2 kids. So like with Costco, they only allow 1 person per member. And so I ordered it on Instacart, and they delivered within 2 hours. I order stuff that like have all like seals, like cereal, milk, things like that. Just, I ain't order like meats and stuff where it's like easy to tamper with or whatever. Just, that was my own aspect of it. But it was a little bit pricey, but it was totally worth it based on the time. Everything was clean. It was totally worth it. So I just want to make a shout out for them because there was a ton of negative reviews, and you know how it is. People will talk bad about something before. If it's good, they don't say nothing, but if it's bad, they're gonna tell 20 people.
Bad news travel fast for sure. That is definitely true. And then a little more kudos to Instacart. I mean, they're like competing against Amazon. So they're like hiring workers like crazy. I saw like they're trying to hire over 300,000 workers throughout North America. So, clearly people, definitely want to find a way to use them, but they got to have the workforce and they be able to deliver, products to the customer. So yeah, it's man, yeah.
Yeah, Instacart definitely is like real big in Michigan because like even now, like he was just saying that he was able to get his groceries in 2 days. It's a waiting list now to get stuff at Instacart. It's like 2-3 days or whatever. So Instacart definitely is a godsend. And now that I'm thinking about it, I probably want to get stock in that company too.
Okay. Yeah.
Also, so I was gonna say, Crystal, it was actually 2 hours. I got it in 2 hours. I ordered it, and I ordered it. I think it was like at 2:00. They brought it by like 3:45.
Oh wow, that's even better. Yeah, because it's like 2 days, 3 days. It's real bad here because so many people was using it. So they need more workforce.
Oh, okay.
That's good. Okay. Does anybody have any last stock questions before we get ready to wrap up?
What about automotive? Nobody's buying cars and their stocks are really tanking, but that's not going to last.
Except for Tesla, they keep going up.
Tesla is a technology company, not an automotive company. Is my that.
So my friend keep telling me that.
I read something today that said no, they're a power company now. They have some battery technology that they just announced. Literally now they're a power company.
Man, Elon Musk is risking it all, man. He's like, I'm gonna come out there, take me to jail. Don't take anybody else. I'm like, this guy, man.
Wow. Yo, didn't he say something about like he was gonna go to California, but he's like, yo, forget that, I'm going to Texas, something like that. Like, you gonna put his plan out there?
Texas or Nevada? Nevada.
Yeah, but he was saying he thought about going to Cali, but then he's like, forget that.
Hopefully one day it drops to $300. I'm getting in for sure if it drops to $300.
I think I don't know, man. I think automotives are just gonna it's still just, you don't know, something's gonna change it. I think these technology companies are kind of changing the way we look at transportation. So I don't know, man, with like the Fords and then the GMs and those companies, it's going to be interesting to see. They're going to have to like team up or something. They're going to have to figure it out.
They have so much competition too. It's not like you have companies that are just like 2 companies. But with cars, there's so much out there, so many different companies.
Yeah.
But they are teaming up. You have, Subaru and Toyota teaming up with GM. You have the German automakers working together to develop battery technology. Tesla's probably about a good 5-10 years ahead, but I don't suspect that's going to last.
Yeah.
And, just like Sony used to have beta, and they wouldn't share the technology. EHS, which was an inferior product, ended up taking over. I know I'm dating myself.
That boy bag, dang.
But I can see Tesla doing the exact same thing, and the rest of the industry ganging up and coming out with standardizing the technology and kind of pushing Tesla into obscurity. So Tesla has to be careful because they can't fight everybody.
Yeah. Yeah, that's really good insight for sure. That's a good way to think about it. So yeah, other than that, any other questions, comments? Hey, what's Adrian? What's going on, man? I seen you been chiming in, man. I'm gonna call on you. How you doing, brother? You on mute?
I'm on mute. Yeah, I'm doing pretty good, man. What's up?
What's up, man? What brings you on the call, man? What you got going on?
Just listening, try to get some info, see what's good,
That's good. That's good. You got a stock you've been looking at, man? Tell me what you've been doing with your stocks.
I haven't bought anything. So scared to pull the trigger on some of this stuff, but the ones that I do want to look at, I'm keeping an eye on now is UPS. I think we brought that up earlier.
Yeah.
Some of the banks, like Wells Fargo, Bank of America, US Bank. And then talking about retail, Costco. Costco's a big one. They do a lot of the online stuff too.
Oh, yeah.
So they're making the adjustments. And I think that's a pretty good one.
JP Morgan.
I mean, and that's how you start, bro. I'm telling you, like, look, you got a Nike shirt on right now, man. Just go buy one share of Nike stock for real, for like, what is it, like $70? It's probably 60. It's usually between like 60 and like $90. So what I've known the last like 4 or 5 years. So Go get you a share of Nike, man. It's under $100. Go buy, a share of whatever bank you bank at. You should mention the banks, and then go buy a share of Costco in your next like 3 paychecks. And then now you'll have a little skin in the game. You'll kind of, be tracking those stocks now. And you're like, all right, I see what's going on. And you get a little excited. So that's my advice. That's like doing it's like a baby cannonball, it's not like the 45.
Yeah.
I remember 45 back in the day. But what's up, young Abby? What you got going on, brother?
I'm chilling. I was at least stock wise. I know the PS5 is gonna be coming out soon, so I thought that might be something pretty interesting to look into. I've never checked stocks like when the PS4 dropped, so I don't know like how much it'll change or anything like that. But I thought that was something interesting, just because that's something new that's going to be put on the market soon. At least in terms of other like retail stores and stuff like that, I haven't like bought any stocks yet, and I'm still kind of like waiting. Just I don't even know what I'm waiting for, but I guess like I'm a little nervous too to kind of get into it. But I guess I just gotta jump into it like head on. But like again, stick with the stuff that I know too. So
just remember, scare money don't make money.
Yeah, exactly. I just gotta do it.
Yeah. One simple way, just you could look at. Costco is probably one of my favorite stores. I think Adrian was just saying that, and I know I think they just raised their dividends. So keep it simple, and like if you go to Walmart all the time, I think a share of Walmart right now is $128, and or $130, and that's retail.
Yeah, definitely.
Sprouts is another retail stock. Some of these things popped in my head. So, think about a store that you frequent all the time.
Mm-hmm.
Maybe not like if you went to JCPenney because they're really low right now.
Yeah.
But maybe more of something that's like, hey, this company's established. It's really good in the next 20 or 30 years or whatever. And just buy one share of that.
Yeah,
or like
definitely.
and just start there and just keep an eye on it.
I was gonna say, do you guys think it's best to like, at least when you're first starting off? I don't know if you like, because like I have money like saved up to do it because I know I've always wanted to start getting into stocks. But do you guys think it's best to kind of like ease your way into it and buy maybe like one share at a time, like with multiple different businesses, or do you think maybe like investing in like multiple or a couple different stocks at one time?
Start with an ETF.
ETF?
Yeah, start with a broad-based fund ETF, an S&P.
Yeah.
Start there.
Okay, I was taking notes on some of those ones that you guys were talking about too, so I'll look into those ones as well.
Yeah. Even
ETF will just spread it out.
Yeah.
If you start with ETF, or maybe just spread it out, or if you like a stock, just buy average out instead of going in one time.
Okay.
Yeah.
Yeah, that FFTY, that tech one with the Zoom and Netflix and Amazon, I feel like that's all pretty relevant right now, and that's stuff that everyone's really using more than ever right now. So I thought that was interesting too.
Oh, there's an ETF that's like the S&P 500. I think it's called VOO. VO. Yeah, that's like you buy into the S&P 500.
Okay.
Yeah.
That's a total stock market index ETF. I think that is the FBOO. I think that's it. But don't you could just Google it. BOO.
Yeah, it includes everything on the market in the S&P.
Oh, I see that.
Yeah.
Okay.
That's basically you gambling. You're saying the market will go up, and who knows? At least
betting on American markets.
Got you.
Essentially betting on the American economy going up the next however many years, whatever your time horizon is for that stock. But if you're planning on getting cash back within a year or two, that might not be the best way to go. But if your time horizon is a decade, make that money.
Yeah, definitely. Cool.
You'll definitely make a lot more returns. Over the last 7 years, I've good gracious, about 120% I've made.
Wow. Yeah, I'm patient, so I mean, I just want to choose the right one. That's really it.
Yeah.
But you can never go wrong with like Disney, Microsoft, like those big names, Nike.
Yeah.
Yeah.
Definitely. Cool. Well, thank you guys. I appreciate it.
There you go. So, Zach Solomon down there, man. I see you, man. I haven't heard from you. You gonna tap in? How you doing?
I'm doing pretty good. How are you doing?
I'm good. I'm good. So what brings you on the call? Tell us who invited you, and what have you heard so far? What do you want to share?
Sure. Yeah, I was invited by Jayton. Sorry, and I was on the last Tuesday. That call last Tuesday. I forget what it's called.
First Tuesday.
First Tuesday.
First Tuesday. Last Tuesday. All Tuesday.
And I'm very much into like the idea of financial independence and retiring early. So I'm on the call to learn about stocks, even though it's not like a primarily dividend stock call. I'm trying to learn about capital appreciation in stocks because like as I'm graduating and like starting my career, I'm trying to figure out like what's a better play for me, like real estate or stocks or maybe like REITs, like the mix of the two. And so I'm trying to learn from you guys pretty much.
Oh yeah. We're gonna cover REITs in another segment. That's another one that I've been interested in and I've been tracking for a little bit. So I think there's one that it does like cannabis related like real estate. which is I think a good play. Trying to scroll through and see if I had one or two. I think one was XLRE. I'll put that in the. But yeah, I've been looking at the REITs for sure. But so far I'm just looking. I haven't jumped in there yet. Just kind of feeling around. So.
Nice.
Yeah.
Zach was probably what I know. I think it's Chancellor. You've been in the game longer than everybody, but and then you ever heard of Robert Kiyosaki?
Oh yeah.
Yeah. So he has it in one of his books. He calls it the 5 Financial IQs. He says it's not stocks, bonds, real estate, business, all those different asset classes that make you rich. It's what you know about it and how to apply it. So, but the first thing he talks about is putting together a plan. So it's kind of like getting into real estate is good, but if you don't have a plan for what you're going to do with the real estate, I believe we was blessed enough to get into a duplex and we got one rental, but it's like now we didn't get into real estate with a plan, but being in real estate with a plan. When we purchased this last property, you're very intentional about every action you take. When you don't have a plan, you're just, oh, that sounds good, like a good deal. And then you get in and you found it was a bad deal. And you with a goal, you have parameters on what you're doing. You really get intentional. And that's where just like anything else, like if you an athlete, somebody who's in the NBA, they don't just throw the ball in the hoop. They know exactly when to shoot, where to shoot, what point to shoot. They practice that. So it's like so the first thing is really locking down, hey, when do I want to retire early? How much do I actually need in income? What asset's going to generate that income? Then you decide, okay, I'm going to focus on real estate to generate that income. And then I'm going to just work my butt off, stack away cash, or I'm going to learn how to flip real estate or wholesale real estate, whatever. But deciding what your goal is, when you want to get there by, and what it's going to look like for you. And then that really, you work reverse engineer.
That makes sense. Yeah, that makes sense.
Dropping jewels right there, man. Thank you very much. That was another emoji right there. But the YouTube Chancellor, appreciate it. Moses, everyone. You raise your hand there, Zach?
No, I was clapping.
Oh, okay. Okay, I see. I'm learning. I'm still getting the Zoom, game down. D-Mac, my brother, out there, and out there in international waters doing his good work.
Yeah, I'm at quarantine right now in Korea.
In Korea, okay. I didn't want to say your location unless you was gonna say it, but yeah, he out. South Korea.
Yeah, South Korea, man. Quarantine, can't do nothing much. Just stay in the room and then just wait for them to send food, and that's about it. I got about 11 more days till I can get out.
Oh wow.
Yeah, they check your temperature every day. I got to do self diagnostic test every day. But I mean, I'm good. Just got to follow their rules, government rules.
Oh wow! And then you can start work like at the end of court. This is you entering the country right now.
Yeah. I'm ready in the country right now. I'm just sitting down waiting for about another 11 more days. While I'm waiting, our ship is on the way up here to pick us up. So by the time this quarantine is done, they should send me to the ship, stuff like that. So I don't have to worry about the 14-day thing.
Yeah. Well. Yeah. You got to do what you got to do, man. You out there, working hard. So, be safe and as usual, and safe journeys. And I'll holler at you when you get back.
Oh yeah, no doubt.
But yeah, that concludes our stock talk, man. I thank you guys. Let me know if there's any other topics you want to cover. We did retail, we did travel. I forgot the one we did before that. I think it was just random the first time. But if there's any other topics you guys want to cover, just let me know. Put it in the comments or just message Jake and myself. and we can focus on that. I definitely want to do like a technology one. I definitely want to go over the REITs, the real estate, industry, the medical, obviously with the whole COVID medicine right now is a big one. So, we can deep dive. That's, it allows us all to learn a little bit more from each other. So feel free to share. So, but other than that, you guys have a good night. Be safe as usual. Thank you for tuning in. Hopefully someone learned something. The ladies as well, thank you for tuning in. We love to see the gender equality. Love to see y'all. Thank y'all for chiming in and, share with your friends. Everybody share it. The OG Chancellor, thanks for sharing time with us youngins, us pups in the game. Giving people help, good aspirations. I want to make 120%, man. You know what I mean? I want to talk about the next Amazon or something. I jumped in or something. So, but yeah, good luck everybody, and just give it a try. Just get your foot in there. All right.
Sounds good.
All right. Peace.
Yo, thank you. Appreciate it.
See you guys.
Thank you, guys.
All right.